time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Little boom there. All right, we already are off to an interesting week. We spoke a lot about it yesterday. We're going to speak about it a lot more today and what we have to come thus far. Now, yesterday I said on the program, what I was really looking for was yesterday to be the bulk of the bearishness for the week. If we were going to get the most bearish action yesterday, I highlighted some areas you wanted to keep an eye on, specifically staying above that Thursday high. Worst case scenario, if we saw some more pressure, we'd get down to 670.23. And the ultimate worst case scenario will fall a little bit lower than that. We were strong yesterday overall. Much stronger, fared much better than I anticipated, and I'll be honest with you. Way better. Now, I mostly took bear positions yesterday throughout the day, and all of them made profit with the exception of one, so I actually had a pretty good day. Went for 5 for 6, I believe. As the bears had the most opportunity yesterday, again, in my opinion. With that being said. And as you can see, we had a lot of sharp declines multiple times in the day, especially into close there. But the bulls showed up pretty strongly into close with almost 10 million in volume in the last 5-minute candle. You want to zoom in a little bit more, look at the 1-minute candle here on the close yesterday. It's pretty substantial if I remember. Yeah, 5 million in the last 1-minute candle. Huge move at the end of the day to try to bid up the market going into close. Now, after hours, we had Powell speak, as I alluded to yesterday, and basically announced the end of quantitative tightening, which is going to affect the market pretty bigly, if that's a word. And we're kind of seeing maybe the early beginnings of that happening now. Now, as I said yesterday, I would prefer to see the market come down yesterday, which we gapped down and we moved up a little bit. So still overtly a bearish day, although it's a green daily candle. We did gap down, we did close higher, so still a green day, but it was obviously a retracement in price from that Friday high. But now this is going against what I was theorizing we were going to see this week. As I said yesterday, what I was theorizing this week is we'd see some level of bearishness yesterday, the most bearishness, I should say, should have been yesterday, followed by kind of like a choppy sideways-ish day, sideways to down between today and tomorrow, rallying to the end of the week. With the quantitative tightening ending, news coming through officially, right? This is something the market already knew of, but the fact that it has now been spoken into the ether, right? I think that's part of the reason why we're seeing some of this reaction here. So that could change the thesis on the week as a whole. Now, I will also remind you that doesn't change my thesis for the end of the year in general, where I am very bullish into the end of the year. The bearishness was just for the short-term cool down and retracement from last week's move, right? So we might just start moving here earlier. We're going to watch this open very closely, which I feel like I'm a broken record lately, but the opens have been pretty volatile recently. And yesterday was fairly volatile both ways as well. So we're going to watch this open pretty closely here today to kind of get an idea. And towards the end of the show today, I'll formulate, I guess, an updated opinion on where we're going here on the market. I will say that I'm noticing a lot of positioning towards the end of the week higher than we're currently sitting, which is good. It looks like the way things are sitting right now that the market should want to move up and close above Friday's high, last week's high, I should say, which was my original thesis in general, that we would close over Friday's high, at least in a perfect, most bullish scenario, just that we'd sweep a little bit lower between yesterday and Wednesday. So if we're just going to rally, we're just going to rally, and I'm not going to spit in the face of it. We can rock and roll all day. I'm not mad about it. But we're going to just take this with a grain of salt right now, just because we could have a little bit of excitement here. So we'll see how the open goes. If we get more downside today, in terms, when I say downside, I mean consolidation is a better word to use, not downside. But if we get more consolidation today, ideally, I don't want to get under, and again, maintaining the most bullish thesis here. The most bullish thesis here is that we still stay north of those two key LOIs that we saw yesterday that we closed over. So basically this spot right here, the 678.47 and 679.04. So that gives us about $3, $2 a cushion, depending on where we open, obviously, but about $2 at least of cushion into the open here to the downside with a little bit extra if you want to give an extension about 50 cents there to that lower LOI here. You also have the POC right up here, so that's where the most volume's traded, at least in this microcosm of time, right at about 680 even, 679.99. So good amount of support in the spot here. In a perfect world today, we don't rip and rally because I don't want to see that just yet. We had too hot of a move. I want this to cool before we go. So even though we're getting a gap up, even if we came down and closed the day up or came down and still hovered in this area, I feel pretty good about things still that we're heading into the end of the week, that we'd still get that close over Friday's high, which would maintain a very, very bullish Santa rally-esque outlook into the end of the year. But you got to understand that cool down here for the next day or two. It allows these short-term EMAs to catch up a bit. It allows new bears to come in, right, that are stupid, in my opinion. Will allow new bears to come in, will allow new bulls to reload, so it allows the market kind of to reset in either direction, right? So we kind of want that in this scenario. It adds more fuel to the fire to the upside here, ideally. Now, yesterday I did open 2 bearish positions I still have open right now. I do have a spread open for a 682, 683 spread, and I also have some runners on some put size 680 puts, which are going to be not good, which is why they're runners overnight. They're not going to be too great open here, so I might just cut those right away. Again, we'll see how open goes. So I'm just letting you guys know, might be a tiny bit of bias there just because I'm still hedged, at least more short term, at least in terms of I'm an options exposure. But to be very clear, those options are very short-term options too. This is not me shorting for the end of December or January or whatever. These are very short-term bearish exposure, just to kind of hedge my bets here, especially with the spread. If we do get some chop or sideways action there, that because it's a 682, 683, anything south of 682 is max profit for me in this scenario. So, you know, it'd still have a pretty good size position there where, depending on how today goes, we'll see. But I realized some of that yesterday, and I realized some of my 680, or most of my 680 put runners that are today are 0 DTEs. So we'll see how that goes, but no money, no love loss will be there either which way. All right. Hatchet, good morning, my friend Toby. What's up, my friend? And Eddie, dropping the urine in the chat. You know I got this for you, my friend. Alrighty. We got 5 minutes until the market opens. Yesterday, we're going to touch on volatility because yesterday we saw, again, what I said on the show. Basically, what I'm pinning as... Here, let's do the 5-minute chart a little bit better. Basically, I'm pinning as more than likely the high until the rest of the year, this 1818 open on the VIX. Now, I did say, especially through this